Go and book it. The manager of local leadership makes special join from 24K from Inside Partners Africa every Tuesday at 7:20 hours on the Galama Industry.
For Zambian National Broadcasting Corporation, it is good morning and welcome to another episode of the Ndalama Insights Show. I'm Leslie, and of course, today we have a very interesting topic to discuss. We're looking at shares versus government bonds. What should you invest in? And to help us understand this better, we have our regular guest with us today, Ms. Konkela. Ms. Konkela, welcome to the show. Good to have you here.
Good to see you, Leslie. How have you been this week? Fantastic. And good morning, dear listeners and viewers online.
This is the age-old question: shares or bonds? What do you invest in? Let's start with the basics, though. What exactly are shares and bonds, or rather, what's the difference between the two?
Thank you, Leslie. It's really important for us to be able to distinguish between the two types of investments. The shares are like you owning a part of a company. So when you buy shares, you become a shareholder or a part owner of a company. So, for instance, if you bought shares in Chilanga Cement, you are also an owner of Chilanga Cement. When you buy bonds, you are lending money, especially GRZ bonds in this case, you are lending money to the government. So the government owes you the principal as well as interest repayments, the coupon incomes that you get periodically. So with shares, you get dividends as well as capital appreciation in the value of the shares. So that's the return that you get by buying shares in a company. So you participate or you enjoy the profits. Every company, I'm hoping, makes profits. If they don't, then they're supposed to close. But if you're buying shares in a company, you're hoping that it's a profit-making company so that you can enjoy the dividends, which is a share of the profits, as well as the capital appreciation in the value of your share. So that is the two different, that's a major difference or the differences between shares and bonds. So as an investor, it's really important for you to understand these two differences, even as you venture out into where you should put your money at, Leslie.
So how should an average Zambian investor look at these two options? Like, where should they put their money, shares or bonds?
So this is a really nice question. So as an investor, should I buy bonds or should I buy shares? Again, this all depends on your personal financial goals, objectives, and time horizon that you have. As we've discussed on this program on several occasions, Leslie, shares lean more towards, because they're high risk investments, they lean more towards those that have got a longer period of time, a longer time horizon, younger people, because they can ride through the waves of investing in shares. And if you look at our stock market in Zambia, the capital appreciation is over a very long time for you to really appreciate the capital investment in your shares. You are not going to see it in a year or two. You most likely see a difference in the appreciation of the value of your shares. If you look at it from a 5 year, 10 year, 15 year, 20 year period, that is when you're going to see a difference in the value of your share. If you're going to invest in shares and hope to get a return, especially in Zambia, in less than a year, it's quite unlikely that you're going to see the kind of return that you desire from shares. So whether you should invest in shares or bonds really depends on, first of all, your personal financial goals, the time horizon that you have, as I've said, as well as your risk appetite. Now, in markets that whose bond whose share market sorry, in markets whose shares, the stock markets perform really well, it is possible for you to trade in shares and make returns even under a year. But in Zambia, our capital appreciation in terms of shares is really short term. You can't really look at it. It's not that significant, and so it all depends. If you look at bonds, bonds are a secure kind of investment, and many people that buy bonds are those that are risk averse. They don't want to lose their investments or money. I want to preserve my money. I don't want to lose it. I also want to ensure that it's protected against inflation. If you're considering those factors, then perhaps bonds are an option for you. The fact that you don't want to lose your money, because with investing in shares, it's high risk. Sometimes the company might not perform as expected, and it might even be liquidated, and you may not even get the return that you had hoped to get. Whereas for bonds, it is secured. What you invest is what you get back. And even the periodic interest incomes are consistent. They are as agreed when you buy your government bond. So for those that are interested in security, the GRZ bonds are perhaps the best way to go. However, as often said, investing in shares gives you, over the long term, the return that you get by buying shares is way higher than buying bonds. Because if you are investing in a company, the company hoping that it's growing, we're also seeing increased profits and capital appreciation over the long term. Whereas once you buy a GRZ bond, the capital is fixed, the interest coupon incomes are also fixed. You will not see a huge changes in the interest. The interest income will be fixed. You will not see any huge change in the principal. What am I saying? Sorry. So you will not see much difference in terms of the capital appreciation when it comes to GRZ bonds. So that is that, Leslie. Eh,
With the shares, it's provided the company is growing.
yes,
So you are relying on the company growing.
yes. By the way, your volume is not so high, Leslie. Are you able to adjust it slightly?
Okay, no problem. Okay, now let's talk a bit more, about the outlook for bonds versus equities in Zambia.
Mm.
Where is it sitting right now?
So when I look at our bond market, GRZ bonds and our shares, they're really, really two different investment avenues. For me, right now, our stock market is not yes, there's been a lot of performance, and even in the news, we get a lot of news from the LUCE in terms of the all share index has gone up, the value has gone up. But if you actually go drill deep into the breakdown of the all share index, the companies that comprise this, you'll find we have one dominant company and a few others. And our all share index is comprised of about 22 companies overall. And then if you look at the performance of these companies, they are quite on a slow track. And so our share market, stock market right now, it is performing well. We are heading in the right direction. But if you are looking at returns, um, it's not really all that what's the word, fantastic, appetizing, let me say appetizing. But then if you look at our GRZ bonds at the moment, they seem to be quite appetizing, looking at the increased coupon incomes that we're now getting since January. For those of us that are interested in recouping our money as quickly as possible, effective January, with a new issuance method, we are seeing high coupon rates. If I give an example of the 10-year bond, you can get interest rates of up to 24.9% every year. And for me, that is slightly more appetizing compared to buying shares, because as I've said, Leslie, shares are really long term, and if you cannot, some companies, if you bought maybe shares in a certain company, let me not mention the name, you might not even get a dividend in your first year of investment. Whereas if you bought a GRZ bond, you are going to get some coupon incomes depending on which period you are investing in after 6 months. So if I had to compare our LUCE or our stock market with the GRZ bonds, perhaps I would lean more towards the GRZ bonds, Leslie.
Let's talk a bit more about government bonds specifically. How safe are they for Zambian investors? There's this thing that maybe one day the government will tell you they don't have enough money to pay. Does that happen? How safe are they?
I've been asking around, especially the older investors, has it ever happened where local Zambians were told we cannot pay you your coupon incomes? I know Eurobonds, which has been in the news recently, Leslie. For Eurobonds, Zambia cannot make the dollars. And why we say the GRZ bonds, particularly the local ones, are quite secure It's because if government had to, be faced with a challenge to repay back, Zambia, the BOZ can simply say, guys, let's print the kwatas, and I know it's got an effect on inflation, but then they are looking at the people, the investors that they owe. So this is backed by the government, and it's secure because any country has got a right to print their currencies if they ever wanted to, and it's part of physical policy or management by central banks. And so if ever government was to get in a situation where it's really hard for them to pay back, they would print the kwatas and pay back the bondholders, which is why GRZ bonds are pretty much secured and are backed by the good faith of any government. And then the other advantage, Leslie, is really the regular interest income. I think I mentioned to you, maybe Lena, on a program before, that seeing that your coupon income hit your bank account is really exciting, and it is something that you may not perhaps see from a dividend. If you had to buy a dividend today, you may not see that maybe in a few years' time, but with government bonds, you are able to see that after 6 months. And also, government bonds, even just let's say, if we talk about bonds generally, corporate bonds, if ever a company had to default and you bought maybe a corporate bond, you are senior when it comes to getting your money back anywhere in the world. So if you bought a corporate bond and the company was liquidated, Leslie, the shareholders are going to wait for you to get paid. As a bondholder, you get first priority to get your money back compared to the shareholders. And so bonds generally are much more secure investments, low risk, but with lower returns as well. That's why they say low risk, high risk, high returns, low risk, low returns. The shares, you're carrying more risk and expecting more returns in the future. So that's the difference.
What advice would you give our listeners, on selecting good stocks or shares to invest in? I know we've got how many companies? 13?
22.
22.
Yes.
Yeah, okay. Someone was breaking it down.
Mm.
I think 13 were the ones you recommended. From the 13 we came down to 4. But yeah. But how would you what would you look at when you're looking for a company to invest in? You want to buy shares.
So particularly for Zambia, Leslie, which is a very unique market, for me, I'm looking at, and this is something that I'm doing. I have bought some shares in a few companies. I'll be sharing with you in the next programs. I want to see the performance of these shares and even the dividends that I'm going to make, so that I can actually share this information with you. For me, what I'm looking at is growth companies. What companies are growth orientated? So when I look at a company, I'm looking at the capacity for it to grow, scale, because with a company, you want a company that can increase their profits. The profitability needs to increase. So even as I look at the financial statements of a company that I want to invest, which is what you should also be looking at, you need to look at the financial statements lately, because the financial statements will show you the profit of the company and whether it's been increasing year over year. So always look at least on a minimum 3-year prior. So look at we're in 2024. Start from, let's say, 2022, 2023, 2024. Look at the company's financials. Is the profit going up? We also look at the profit, the earnings per share. What do I expect to earn per share? Any share that I've invested in a company, what is my earning per that share? So that when I multiply my earnings per share, I'll be able to know the kind of return dividends that I'm able to make if the company had to declare a dividend. And so if you are looking to, if you are interested in picking a stock or buying a stock, always consider the company's financials, look at their sales, look at their profitability, look at their debt levels as well, because that will impact your dividend return. Also, evaluate the management capacity. So even if for our local Zambian companies, evaluate the capacity of their management team. What kind of management do they have? And if they're in the news, are they in the news for the right reasons or for the wrong reasons? So really do a thorough investigation before you pick any stock. But for me, for Zambia, I think the biggest thing that I would really recommend is look at the capacity to grow and scale. Does this company have that capacity to scale and grow? And if you're interested in getting a regular income, like a coupon income through dividends, also look whether they've declared dividends in the past. When was the last time this company ever declared dividends? How much did each shareholder get per share in terms of the dividend. Look at that as well.
Dealing with shares, it's not like a job, right? You can't just buy the shares and forget about them. It's quite different from the bonds where you buy and forget about
I like that you're now starting to understand these things. I like that, Leslie. Definitely, you're absolutely right when you say when you buy shares, you don't go to sleep. And with bonds, you can actually buy bonds and even forget about them. For 15 years, you just earning your coupon incomes. But with shares, you really need to check how the company is performing. Attend the AGMs as well. And you'll find out, hear what the directors are saying at the AGM, because all that information is relevant to you. You are not stuck with the share. You can always offload it. You can always sell it. And so I'm happy that you picked that out, Leslie. So when you become a shareholder, don't go to sleep. You need to check on the performance of your share, because that is why when it comes to rebalancing your portfolio, your investment portfolio, which is just a group of investment types, different types of investment that you've made. If you find that a share is not performing really well, you can sell it, buy another share that is doing well. Leslie, there's feedback here from NT saying, I never hear Leslie. His mic is too low. You see, I've told you before that let's also get together on this YouTube so that people can see you. They want to see you.
Yeah, we will definitely work on it. I think starting from next week, it should not be a challenge whatsoever. So you will be able to hear all the questions as well on YouTube. Remember, you can also, if you listen to this show here, you want more details on the show, or you just want to listen again, you can visit Konkim Conquer on YouTube. And you should be able to find the channel. And of course, these programs are all available there, so you can listen again to everything we talk about in the show. Konki, thank you very much for coming through this morning.
Thank you, Leslie. May I just end with just one announcement? I won't take long.
Sure.
So Inside Partners is conducting the Know Your Tax workshop, annual workshop. We are in the Copper Belt in July, second week of July. We are in Lusaka on the 27th and 28th of June. It's Know Your Tax. We'll be at the Radisson Blue. It's a very exciting workshop. We've got facilitators from Zambia Revenue Authority. We've got our lead facilitator, Mr. Anthony Goma. So if you've attended this workshop before, there's a lot of variety that you're going to see this year. So contact me on 977 44 5604 for the Know Your Tax annual training workshop, where we look at everything that has to do with tax, transfer pricing, the smart invoicing system that ZRA has introduced effective 1st July. We're looking at all of that. So one more time on 977 44 5604. Know Your Tax 2024 is on your way.
You have been listening to Dalama Insights Business Show, brought to you by Insight